Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Looking at Apple on the daily and weekly time frame, bears taking over, a large part of that due to the overall market conditions, but we saw the weakness in Apple as soon as we broke the low of the reaction to earnings, 113.31. That was an indication of weakness, hitting lower lows, and then the all-out dump today, and we broke a lot of key support. We broke this base of support. We had a double bottom at 111.55 and 111.80. And we broke those levels and closed below them. So that's a loss of key support. We now have a lower low on the daily time frame. The weekly shows that loss of support, but we do have the 100-week moving average of 110.20, and after that rejected the price, it should act as some decent support. And there's also an uptrend support line to be watching here, where if we hit the bottom of the real bodies of the candlesticks, we are right at that support as well. It's a very steep uptrend line because we have been in a very nice uptrend over these months, and we'll see if the bulls can maintain that very strong uptrend. And you can see I do have candlesticks, real bodies dipping below, but it's only the green candlesticks, and every single candlestick is closing above this uptrend line, and it's the close of the candlesticks that are important. So the bears are in control. The low of today is a new support level down at 110.53. There are gaps down here. There's a gap at 105.72 to now be watching, now that we lost 111.55 support. We'll see how long it takes to get there if we do get there. Very clear bearish indications on the daily time, on the 5-minute time frame today. Rejecting from the 100 and 200 period resistance first thing, dumping, and then from there we didn't even really test the 20 period 5-minute moving average resistance besides one time here, all the way until 230, and that's essentially the exact pattern that SPY was in. Didn't test that resistance, got above it at 230, and the hourly chart for SPY and Apple looks identical. It's potential to be a little bear flag. We would have to see Apple and SPY get above their 8-period exponential resistance, which is 111.80 for Apple, but that's going to change with pre-market being factored in. So watching very closely, but very clearly that the bears are in control of Apple on the daily time frame with the dump that we saw today. So we'll check back in as always, and keeping an eye on that gap down at 105. It would take significant market weakness to get down to that point, in my opinion. We would have to see continued pullback in SPY, but we saw that weakness today, so it's not out of the question, and we'll continue to check back in. Thanks for watching. Thanks for the likes and the shares. See you tomorrow after hours.